So along with some of that, you alluded to this moral judgment. Do you guys anticipate, or do you think we need more regulation and oversight? I mean, Allison, do you feel like that's sort of a given now, and that's going to happen? Or?
I do. I think it's a given. I think that we may have very different points of view of whether that's good or bad on this panel. It might be interesting to check. But I think that there's no question that two things. I think that what we saw happening in the last 18 months to 2 years, Carson, I mentioned this to you before. I sort of see the financial meltdown is just like sort of Enron came up with Sarbanes-Oxley. I think we're going to see this financial meltdown come up with some sort of a financial regulation of our entire industry, and very broad-based, that is going to be, I think, very initially, actually, I think quite heavy-handed. That's my guess. I think that you're going to see the regulators ultimately, or at least now Congress looking at, I think they're really going to start looking at this program trading now, which I think is going to impact a lot of funds and a lot of strategies, potentially, if they're curtailed in any way in the future. I don't know if it's going to go there, but I think there's going to be a lot of investigation of it. I think shorting is still under pressure in terms of the regulation. I think that we may see that there will actually be some more regulation on shorting. Capital requirements within funds themselves, private funds, public funds, I think that's coming. That is going to impact what you were just talking about, returns, if you're looking at capital requirements in a private fund or even a public fund, and transparency to the regulators. I think that's all coming. I think that it's going to be very difficult for funds to not let the larger financial system know what they're holding, what their risk is, and I think all of this is going to impact the strategies of a lot of private funds. So I think it's coming, and I think it's going to have a lot of direct and indirect impact. That's my point of view anyway.
Anyone else care to comment?
I just think whether you think it's a good thing or a bad thing, I agree with Allison. It seems an inevitability that there's going to be more of it. And I think our approach has been less to kind of guess what form it might take and to make sure that the people we're invested with have the infrastructure in place to be able to comply with whatever the kind of heightened regulatory oversight is. I suspect it'll, whatever path it takes will create constraints on some people, but will, result in opportunities elsewhere.
Okay. Well, at this time, I think I'd like to open the panel up for questions from the audience. If there are any, as we have a couple minutes remaining. If you wouldn't mind, you can just raise your hand. I think there are mics floating around. Or do we have any? Anyone want to query the panel? Yes, I think there's one in the back.
Hi, I'm Andrew Ross with the San Francisco Chronicle. You addressed sort of in the last round a number of questions about how what's happening is impacting your business, but there have been SEC investigation, Justice Department investigation, and today we read that there are investigations of some of the usual suspects and whether they in fact interfered or deceived the ratings agencies about some of the securities they were covering. How has this sort of impacted, and you've addressed it a little bit, but how has this sort of atmosphere and this sort of growing number of investigations, do you think, affected your business and affected, people's approach to what it is that you're doing? How serious is this sort of atmosphere of investigations and allegations of criminality, do you think, affecting the entire industry?
Anyone? Volunteers?
I can take a stab at it. Really only for our fund. I mean, we are super careful. I mean, we always have been, and the sort of investment strategy that we have is, it's not out there in any way. But we are doing a lot of questioning. We don't usually invest in derivatives. It's not in our strategy. So we question, well, if we wanted, we want to do an options trade, should we do that at all? Is it going to look suspicious to a regulator if a fund that doesn't usually trade in options all of a sudden trades in options? I mean, we're doing a lot of thinking internally in a very defensive manner, and I guess I'm giving you a really honest answer to your question, but there's no question that you start to, when you feel that you are under the microscope and that you're in a potentially harsh environment, that you start really second guessing and thinking, in some ways, I guess, getting paranoid maybe. Anyway, that's an honest answer from the lawyer within a hedge fund anyway.
Yeah.
Well, one thing that's happened over time is at this time it's kind of surprising because after the last bubble collapse, after the tech bubble, of course, compliance, which a compliance officer became a very prominent position. Prior to that, it was sort of a secondary position, and most funds I would expect would have made compliance a more important component, and compliance officers became very, very high in demand. Aside from that, though, I have to add that this bubble is not unlike other bubbles. There's one universal thing attached to speculative bubbles, that when they burst, at the end, people go to jail. It's almost universal. You can go all the way back to the 19th century, and you'll see that happen. And it doesn't look like this bubble is any different than any of the others.
Okay. Any others? All right. Well, I would like to thank the panel then for taking the time, and we'll take a brief break and reconvene in a few minutes. Right? Thank you.